Hi, I'm Michelle Smart. I'm an enrolled agent, and let's talk about what's new in ERC. And what's coming down the pipeline is audits. So lots of audits are going to be coming as well as pre-audits. So there are two types of audits. It's the new pre-audit 6612 form, and then there's the regular audits. So let's talk a little bit about do's and don'ts of audits. So one of the things I would always suggest is that you do not represent yourself during an audit. I usually try to get the owner out of the room and not in the same room with the IRS agent. Why is that? Because the client will know the answers to the questions. They may not be something that I would like the client to state. Sometimes it's better if I can reword it or state it in a way that is more in alignment with what we want the auditor to hear. I don't want to lie about something, but sometimes there's a better way to say it. And the audit is confined to what the scope of the audit should be according to what's described in the letter from the IRS. They are only allowed to audit the thing that they are say that they're auditing. But if you bring up something that you did in a previous quarter, you've just opened the door for them to audit something more. So I like to not have the client be present, as well as if there is some question that I don't really want answered. I will say, I don't know the answer. Let me speak to the client, and then I will come back and answer that question for you. And this gives us time to think about how do I want to answer that question? How do I present it in the way that's most favorable to the client? And I think that just often um, the client is not as aware of the laws, not as much as I would be aware of the law that I was representing. And so it's best if they just don't say anything and I have them out of the room. So that's just a general rule for any kind of audit. We do not want to open the door to audits into other areas as well. So just allow the person who's representing you to meet with the auditor. Now, what we're having is this pre-audit or 6612, which I've shared with you in previous videos. This is for people who have not yet received their refund for the ERC. They filed the Form 941X, and the IRS is sending out a letter 6612. I would say get with your tax professional before you respond to that, but you must respond within 30 days. So it's very important that you respond to that or you can lose your ERC. Now, that letter is going to ask for substantiation of qualifications, and so it's important that you have those and that they are very specific, not something that's reaching. So let's talk a little bit about what is the wrong or right about how you're going to say that you qualify. So there are essentially two ways to qualify for the ERC, and we are specifically talking about audits and the ERC and pre-audits for the ERC. And what you have to have is you have to be able to prove that you qualified by partial suspension or that you qualified due to gross receipts reduction. Now, there's also the recovery startup business, which is fairly straightforward. It's just that you started in business after February of 2020, and then you qualify third and fourth quarter 2021 automatically for the ERC. So that doesn't really take a lot for proof. But now, when we're getting ready for the pre-audit or the audit, then we have to have certain things. And I would like to direct you to some of my other videos. I have a video on will your ERC sustain an audit, and also how to qualify by partial suspension, which is probably the more difficult, but the more common way that people qualify. So obviously, if you qualify financially, it's proving that, bank statements, profit and loss, showing the comparison that you had the reduction in gross receipts that was required in order to qualify. So that's a fairly straightforward qualification. Now, partial suspension, that's the one that you can get yourself in trouble if you don't have the proper information. The most detailed information, like I said, is in my previous videos. But what is it that they're going to require? They're going to require that you prove you had partial suspension due to an order from the government, and you need to understand the ins and outs of those orders. If they had a stay-at-home order, that doesn't necessarily qualify you, and that's in the frequently asked questions on the IRS website. And so don't just assume. Like what I do when I meet with the client for ERC is the first thing I do is I interview them and I ask them a lot of specific questions. And a lot of times they'll say, well, I was partially suspended because of this, 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 and this. I know the frequently asked questions on the IRS website. So I no, sorry, that doesn't qualify you. That doesn't qualify you by the law. It has to be by the law. And so I will dig deep and I will get their story about what applied to them that would qualify them for a partial suspension. So you have to have those laws. I've researched a lot of those laws. I've saved a lot of the laws. You go to the government website. Usually I start with the executive orders on the governor of the state's website. I look at the orders from the health department for that state and the county. Sometimes the county will have different orders. And I've gone through this in more detail, like I said, on other videos, but it cannot be suggested. We suggest you do this and we suggest you do that. No, it has to be an order that you are required to perform in a certain way. And that later got clarified as to how much of a suspension do you have to have, because you're not having to qualify financially if you're qualified by a partial suspension in your business. So let's just take a look at this form from the IRS. Now, this is N2021-20 that was put out by the IRS. And this has a little bit more detail. You can look this up. This is page 39. It can't be that the partial suspension didn't really have an effect. You have to kind of prove this. And so what they've stated is it has to have at least a 10% suspension. However, that is not defined. It is not defined as dollars. It is not defined as time. It is not defined. So we have to define that and show. For example, a lot of the companies that I worked with had to do a lot of extra activity to maintain the 6-foot distancing. They had to create separate offices. They had to do different procedures, and the time that it took them to do the same thing that they did prior to COVID, due to the rules and laws that were imposed upon them, it took them a lot more than 10% additional time. So you could say time might be one of the parameters that's a 10% suspension, but you have to define that and prove that in a way as though you were in a court of law, I guess. Just you want to have that substantiated. So in other words, you have the laws, you have a description of how your business was impacted, and as much as you can to be able to prove that there was a 10% suspension of some kind. This doesn't mean that if you're an essential business, you don't qualify. Essential businesses can qualify. You just have to look at all the rules. Now, this is something that should have been done for anybody who applied for ERC, should have gone through this process of a narrative if somebody else qualified, rather an interview with the person who's qualifying you, who knows those laws and has saved those laws so that you can be prepared in case there is an audit. You have to have those laws in order to know what are the dates that I started to be suspended as well, because you can only take the wages that apply to the dates that you were suspended. So maybe you're suspended 2 weeks, or maybe you're suspended for a year and a half. It just depends what the laws are, depends on the activity, and that all has to be written out. And another thing that I see that is a concern if you were going into an audit is people claiming things, like I said, that were not laws, but were suggestions. The CDC made suggestions. Those are not laws. That will not qualify you. So you've got to have all of those laws and how that affected your business. So that would be probably the more important part of the of the audit is that first proof that you qualified initially. So either by partial suspension or financially, or if you're a recovery startup business, those would be your qualifiers. Now, the next step would be, how did you calculate? So that's, if you're going to be represented in front of the IRS, you would better have done your big spreadsheets. You can't take a 941 and divide it up and think that you've done your calculations. No, you've got to go through and you've got to take out sick leave, vacation pay that was accrued prior to the start of the suspension. You have to take out PPP wages. There's limitations on how much PPP wages can be deducted per employee. This is a per employee calculation. So this requires, for me, I write down every paycheck and the periods of what the time period that it covers, if there was PPP, whose paycheck it came out of and how much, and up to the limitations. Owner wages, family wages, this all has to be deducted out. FFCRA has to be deducted out. R&D credit wages have to be deducted out. So you got to have a big calculation and show that you've done it correctly. So these are the two main things: is proof that you qualify, and then having the proper calculations. And I would suggest again that you don't represent yourself. You have someone else who represents you who is qualified to do so. And that would be an enrolled agent, a CPA, or an attorney. And those are the people who can represent you in front of the IRS. And you also should make sure that that person really knows the law. So this is Michelle Smart. I'm an enrolled agent. Please share and leave me any questions below. And I'll also post a link to how to qualify by partial suspension, where I go into more detail as to what I would expect. If I was auditing you on the ERC, I expect to see these kinds of documents. So thanks for watching.